Hello and welcome. I'm John Butler, Investment Director at Southbank Investment Research. Today, I'm joined by my colleague, energy expert James Allen. James has over 15 years' experience following the global energy markets. He's worked on both sides of the Atlantic, and he's worked extensively to analyze not only traditional energy markets, but also clean, renewable, and cutting-edge energy technologies. As someone who follows the markets broadly as part of my remit, I'm particularly interested in what's been happening in energy over the past couple of years. The market's been totally upended by global events, underlying trends, old and new. And so I'm very pleased that James could join me today. Thanks, James.
Yeah, thanks, John. Thanks for having me today.
Well, fantastic. Look, as I just said, the energy market has been just a fascinating place over the last couple of years. Lots of money has been made. Yeah. And there's been lots of shifts around in terms of where the money's flowing, what investments are outperforming. Give us a big picture overview how you see all of that.
Yeah, the markets have been in a state of flux really before, I'd say, Russia's invasion of Ukraine. I think you could argue that Putin was weaponizing those natural gas flows before then. We saw a big run up in natural gas, and that really upended, certainly in the European energy space. I think there was a pushback away from clean energy technologies that had seen a big run up in the preceding couple of years. That quickly became out of favour, and energy security of supply became the main topic of the day. And therefore we saw really across the fossil fuel traditional energy space and hydrocarbons, that they came roaring back into fashion. And lots of investment was then put into oil and gas, and we saw markets respond accordingly.
Right. Well, as the British government sort of has as its official energy policy, they say they're solving for this trilemma. They want energy to be affordable, they want it to be secure, and they also want it to be increasingly clean and renewable. But it's kind of hard to solve for all three of those at the same time. And so we've seen something of a reprioritization, not only here, but just about everywhere, right?
That's what I think. Previously, I think security of supply was sort of the forgotten about part of
taken for granted, right?
A little bit, I think, exactly. I think that was sort of going to be tomorrow's problem rather than today's. Right. I think what we saw with this crisis is actually today's problem, and therefore I think there's been slightly less of an emphasis, I think, on pushing forward with the energy transition. I think that's hit a couple of speed bumps, I guess, and the focus has been on oil and gas. But that's obviously not to say that the long-term bullish case for renewables, clean tech, that's not gone anywhere. We've seen sort of big state-led industrial policy, which is pushing huge billions and billions into the clean energy side. But equally, we've seen sort of the private sector really emphasize hydrocarbons. We're seeing investment really roar back into fashion, way higher than it was a few years ago. I think we hit $1.1 trillion in oil and gas spend last year. We're going to have similar amounts this year, which is a lot higher than just 5 years ago. So I think wherever you look really in the energy market, it's a really interesting time, and there's money to be made really across the board.
Well, it seems the money's arriving from all directions. You're getting it top down from the government for various reasons, not just the push to renewables, but also, as you say, this renewed focus on energy security. But then, of course, there's natural bottom-up interest in traditional energy technologies when you have such a gap that's sort of been left in the market, in large part, of course, as you point out, in Europe because of the tragic war in Ukraine. But with money coming from all directions, you might say, well, hold on, that's going to lead to this sort of flow, rising tide that lifts all boats. But do you think there are some areas of the energy market that are less likely to see gains than others?
I think it obviously depends where you look and what sort of time frame you're looking at. I think that the ESG space right now, there's been a lot of greenwashing. There's been some pushback from both sides, the left and right, with the ESG space. So there's certain, I wouldn't necessarily be looking to buy an ESG fund right now. I think I'd be much more selective in the clean energy side. Certain stocks have a very exciting bullish case as a thematic ETF. I'm not so sure that's the way to go. There's so much sort of greenwashing. There's the bigger sort of investment funds are sort of pulling out of these bigger funds. So right now I think that the story really is all of the above. I think we're seeing spend is going to be $1.1 trillion in oil and gas this year. Actually, the IEA have just said that spending renewables this year is going to be $1.7 trillion. It was only 1.1 or 1.1 last year, so that's a big increase this year. So I think the markets haven't fully taken that on board, what exactly is happening. I think we all know last year was a really exciting time for oil and gas, and that's been bubbling away quite nicely already this year. We've seen lots of stocks make big moves this year already, and that's on the back of a very exciting 2022. But I think the clean energy side, I think that the formula there is becoming very exciting indeed. We've seen, the Inflation Reduction Act in the US. We're seeing a green industrial deal in Europe. China making big moves as well. I think that market has got some serious legs as well. Really, it's been sold off quite a lot over the last couple of years. And I think that there's a real exciting bullish case to be had there as well. So right now, I'm looking at lots of exciting ways to play this all of the above scenario, because wherever you look, really, there's a market somewhere that's bubbling away really nicely indeed.
Well, what about nuclear? Because in a way, it ticks every box. That is, it's proven to work. We know it produces, once it's up and running, extremely low cost energy. And of course, it can also tick the, well, maybe not fully zero carbon box, but certainly low carbon box when you take all of the construction and everything else and infrastructure into account. I mean, nuclear would seem to me is also a no-brainer here practically, isn't it? Yeah,
that's right. So I think, and I've seen the market is just starting to work that out really. Obviously, we've seen uranium prices have hit a year high in the last couple of weeks. We're seeing lots of excitement on the demand side. Lots of countries announce new plans for nuclear. There's in the US, there's a bill going through the Senate which is looking to promote nuclear technologies as well. On the supply side, it's not looking so promising. We're seeing Namibia, which is a big producer of uranium, that they're nationalising some of their nuclear industry. That's creating a bit of a squeeze. The US production hasn't been all that good, so I think certainly the bullish case for uranium is very compelling indeed. So I think the markets are just starting to wake up really what is happening. We're seeing, as I said, on the demand side, countries moving back into nuclear because it's just seen as as you said, once these plants are up and running, it's a flexible, relatively low cost once it's up and running form of baseload power, which right now obviously we need.
Well, Finland has just demonstrated it, right? They switch on this big new nuclear power plant, and electricity prices have absolutely plummeted as a result.
That's right. I mean, that plant has been a long time in the making. It was extremely over budget, over time, but it does show, once it is up and running, it can have very attractive benefits for not just investors, but also for electricity consumers in the country as well. So I think that is a natural way the market is going to be looking. I think the UK has already signalled we're going to be turning back to nuclear, both in the traditional sense, but also small modular reactors, which is the coming technology in that space. More flexibility, smaller, cheaper. That's being replicated around the world as well. So there really is now, we're at the foothills of a nuclear renaissance.
But in this country, it is going to take at least 10 or 15 years before any of that additional capacity is going to be online. And in the meantime, we might need to be looking at the North Sea again, right?
Well, that's right, exactly right. So, yeah, I mean, the North Sea, there are some political issues there. I mean, Labour have just said that they're going to ban sort of North Sea investments if they get new North Sea hydrocarbon investments if they get into power. But really, actually, some of these North Sea oil and gas stocks have had a very exciting last year or two as well. So, that's, some of my readers will already know that we've got some exposure to that and done really quite well out of that already. So that's certainly an avenue, the political issues notwithstanding, I'll be looking to tap into as well, because as I say, there is a potential supply squeeze really in the North Sea. Some companies are doing quite well out of that situation. So yeah, that's a market I'm quite excited about.
Well, there you have it from James, an update on his views on the energy markets and what he believes may be in the works over the coming months and years. There's definitely more to watch in this space. Once again, I'm John Butler, Investment Director at Southbank Investment Research. Thanks for watching.